Must be 18 years or older. Sure. You can go on Instagram and check my story. Welcome everyone. Give me some hearts here. Hear me. To make sure you'll see, not just see, you obviously can see, but also hear. Invite. It says my mic is on. It'll take you straight to my profile. Oh, yes. You're there. I see you. Turn the volume up. Okay. That's delayed. Wow. Okay. So you can hear me. All right. You can leave. Yeah. Wow. Okay. There is a delay between going live and those receiving, even on like a couple feet. That's interesting. Definitely need some upgrades with what we're all doing, but that's okay. I think what I'm going to do for right now is I'll wait, turn on this fan. But all right, everyone. I'm glad you're all joining in. Feel free to comment on what you're wanting to talk about. I do have some specifics I'm going to go over today before we get started. I'm going to go ahead in prayer. Father Yahweh, we come before you in the mighty name of Yeshua HaMashiach, as you are great and greatly to be praised, as you are the Elohim who was, who is, and who is to come. And we ensure that in this call, that your Ruach, or Spirit, comes upon us, and that we will not be hindered or checked by any outside forces, and that we will not be involved in any astral traffic or trade, involved in our economic consulting today, and that it is be led by your word. And we pray these all in your mighty name, Yeshua HaMashiach, Elef Tov. All right. Let's go ahead and get into this. First off, disclaimer. I am not a legal counsel, so I'm not a lawyer or an attorney. I do not do any kind of taxes or tax accounting whatsoever. I am not a financial fund manager. I'm not licensed to do finance. This is purely educational content. So I appreciate everyone. Go ahead and heart this, share this for more people to learn, as I'm going to be doing this every single Monday. I don't have a specific timers right now, but I do know for now it's going to be in the afternoons on Mondays, and that's going to be Pacific Standard Time. So wherever you're at, just know it'll be Pacific Standard Time Mondays. Now, so that way you all know that I do have the experience to go and talk about stuff like this. I do have 6 years of training with hands-on experience in economic consulting. So I do have that background, so that way I'm able to give you the information in a precise manner, because we all can use AI today, but when it comes to AI, it's sure efficient, but it's not precise information. And people want not just the efficiency and speed, that's great, but also needing precision is necessary to have accurate information. But the great thing what you're going to receive out of these calls is you're going to have strategies and business models that help position you during economic ups and downs. just like a bank. That way, you are not going to fail. And if you have a setback, you'll be able to have a safety net in place. That way, you are able to move forward continuously to your vision by attaining each goal that you have set for your vision. But because you're going to be building, if you are doing that, your businesses, your portfolios that are going to grow through recessions, it's to help protect and increase your wealth no matter the economy. That's what, as you would call, a family office does. Now, I'm not running a family office, but that's what a family office does. They ensure that the portfolio and the businesses that a family has, or if it's multi-asset family, it's multiple families, they do not fail. If you work with fund managers, they make sure that they have risk management, so that way there's any kind of crisis that happens, there's a contingency plan. You'll have asset managers do similar things. It's just so that way, if anything were to go south, there's something for it to catch on to bounce back. That's what you're going to receive here in what you're going to be learning. As well, when it takes time to implement things, what I'm going to talk about, it really just depends on where you're really at. And that could take anywhere from a day, well, more like an hour, depending on what you're doing, up to 12 months. So, because there's no guarantees that anything will stay the same thing, we still have historic patterns that will give us predictive models. So let's not say that something is just going to crash right now. It can, but on the basis of reality, it's more unlikely. So that means you're looking at anywhere from 1 hour to 12 months. Anything can happen to increase what you're doing. When the time of it being implemented from now until whenever you do. But here I'm going to provide some economic data. So that way you all are receiving a real world perspective and not just something that's hype. Because there's so much hype out there. And there's so much fear porn out there. It really does not benefit people. Maybe for those that are new, or maybe they're stuck and are way too involved into something that is taking them in one direction or another. It doesn't give them a realistic approach that's holistic and gives them that foundation that's solid, instead of having instability of something hyped up too many times or just convoluted with fear. And people don't like that. That's what I'm not here for. I'm here to help you ensure that you achieve those things without those involved. But besides data, because data is good, it doesn't speak as well to what people are also feeling. That's why I also have my network, and when I talk to them, I want to know what they're feeling, because my network is international. And so I want to know what they're feeling in order to really tell, is the data, what I'm seeing, applicable to how people are also feeling and what they're experiencing. That is what I'm also going to be presenting for data that I am going to bring up. I'm also going to, afterwards, bring into a forecast that will make sense for the everyday people. After that, I'll just give some recommended solutions. These are things that you can take. You don't have to. They're just recommended solutions on how to move on the basis of what forecasts I'm providing. Now, today, I really took 5 different websites for the data that is relevant to what people are feeling, because I do have a long list, and I'm not going to go through a long list of the websites that I go through. That just bore you all. So instead, I just go with the top research that is most applicable and applying that to what people are feeling. So, for example, I use what's called Center for Financial Stability. And so you can check them out, called centerforfinancialstability.org. This is the most foundational economic data that I've found that is realistic, that is a non-government, non-profit think tank. Now, yes, they do bring on government officials, they do bring on Federal Reserve presidents, etc., etc., etc. But it's not hyped. There's not a lot of attention with it, but it shows a very clear picture what is happening. For example, the most recent data that came out that seen what people are also doing, they have a positive and a negative review of what's happening. So for July, because it's the last data report that was available, they do it once a month, there was a positive result in demand deposits, liquid deposits, and repos. And I'll mention those in just a moment, what it really is meaning. And then the negative side was small denomination time deposits. This means that bank accounts and CDs, not compact discs, but certificate of deposits, help the banks create more debt with repurchase agreements. But fixed accounts with penalty withdrawals lowered in consumer acquisition. This means that people put more control for themselves into their accounts. So instead of something that gave them a penalty to withdraw from. From this, now, if we lived in the world of how fractional reserve lending didn't exist, but in a way does today. Sure, yes, if you put funding into the banks, they will do fractional reserve lending by taking a piece, like for example, a repo. We'll use in the matter of an account, $100. Let's say someone puts $100 in. What the bank will do then is they will take 10 out of the 100, put it on deposit, take that 90, write 90 in their ledgers as credit, and loan out that 90. So they have technically 190. They'll do that over and over again with numerous other banks. Now that's fractional reserve lending. Repos is a fractional reserve lending 2.0, where someone has, let's say, 100 million worth in, let's say, 1-year bonds. The 100 million is then written as 100 million in the bank's ledgers, where they will take that 100 million and do what's called a short sale debt assignment. So they're in a short sale, you have to buy back. But with a debt assignment, voids that buyback. So the bank will do that to the next bank. The bank will take that 100 million, write 100 million in their ledger, then they have effectively created 200 million. Next bank will do that, 300 million, et cetera, et cetera, et cetera. That's why you see there's this debt that accumulates. So on the basis of them doing repos isn't strictly related to people putting money into their bank accounts. It's not really money, it's an IOU from the Federal Reserve. The way that they actually do it is with the mortgage and the note. So people actually when they are wanting to get a house from the bank, they sign 2 documents: the mortgage and the note. They're not the same thing. They're 2 separate documents. And so what they will do is they will take the mortgage, put it into a pool of mortgage-backed securities, sell it off to Freddie Mac, Fannie Mae, Ginnie Mae. And you will have the note, then they will sell off to investors. Sometimes it could be other banks. So they made a profit off the note, and they made a profit off of the mortgage-backed securities. And they still continue to make a profit off of the borrower. And they take this mortgage-backed security in a pool, putting it into the repo market. And that then inflates the debt. So it's not on the basis of you put your dollars into a bank account and then they use that and they loan that out and they use it through repos. While in one sense, sure, they do apply that. They actually apply it where they take the note and the mortgage-backed security into the repo market. That's how they make their profit. So that is on the basis of what the repo is and how that is used. But again, Center for Financial Stability, they said positives and negatives was bank accounts and CDs helped banks create more debt with repurchase agreements, but fixed accounts with penalty withdrawals lowered in consumer acquisition. The second is what's called World Gold Council. For everyone joining in, don't forget to heart this, share this with other people, so that way they're able to learn what's going on in the world and how it applies to them. But the World Gold Council, while in a way it has some accuracy, there are other points, but this is just a generalized approach. And what they're saying is majority of respondents, however many respondents that is, 73% see moderate or significantly lower U.S. dollar holdings worldwide over the next 5 years. Now, these are not U.S. dollars. They are Federal Reserve notes. Termed dollar on there, sure, but they are a note from the Federal Reserve. Now, they've been saying a lot of this stuff for quite some time. And it's true because of the fact that people are switching into crypto. You also have people switching to BRICS. A lot of countries switching there. But on the point of gold and how that's switching, they say Bank of England remains the most popular vaulting location for gold reserves amongst respondents. They say that's 64% of respondents. Now what they're meaning is central banks, not on the basis of people putting their gold into a bank. You don't really do that. I mean, you can create a private vault for that, but this is coming on the basis of the central bank, Bank of England, holding the most, what they're saying. Going to the American Bankers Association. By the way, World Gold Council is gold.org. That's where you can look it up. But American Bankers Association, which is aba.com. 2 things that were really more relevant from the information that they posted. Tariffs are causing imports to slow down. And then the mortgages. This is where more people are starting to be interested in getting a house because they're saying, oh yeah, hey, rates are coming down. But because of inflation, it's more difficult for people to even really do that. Which comes into points of private equity buying up that stuff. But they say 30-year mortgage rates are now at 6.5%. 5-year mortgage rates are at 5.6%. Now, just because the rates are coming down, I'll tell you why that is important in a moment. But what is important for small business owners is tariffs that are causing imports to slow down means a slowdown on supply chain, which means that it's going to take longer to get to the store. Because it'll take longer to get to the store, the price increases. And it's not because of supply and demand, it's also because of inflation. Inflation is the driver of what prices are doing, just as much as supply and demand. So if you limit an amount of what's being provided to the market, you can raise that price. But on top of that, when you have a currency that is just debt itself, that can either inflate or deflate, also increases the value. Well, it doesn't really increase the value, but increases the price of that product or service, more so the product. So tariffs, while a lot of people were saying, yeah, well, let's go with what Trump said, and tariffs are good, we need to be making more American things. Okay, well, there's not really telltale signs of that happening. There are to a degree, but it's not simultaneously changing with the tariffs being applied for imports to slow down. Now, does that mean exports have increased? To an extent, well, that's not what they talked about. They just show it on the basis of the imports. Again, that's from the American Bankers Association, ABA.com. The fourth one is the SAM recession indicator. Now, the SAM recession indicator, this actually shows when a recession will happen. The last one I showed, 2020. I actually predicted that back in 2019. Nobody listened. Look what happened. Now, the way that it was brought to light was COVID. It wasn't because of that. It was the reason you had 2020 recession was the fact that the repo market, which actually got scrubbed from the internet, and I know this because I did the research, I had the articles, I had the links to it, I couldn't access them anymore. The repo market stopped. The repo market is what actually fuels the world economy. And when that stops up, everything else stops up. So that was the reason why a recession hit. It had nothing to do with COVID. Nothing whatsoever. Everybody will talk about it. Had everything to do with COVID. That is a load of crap. There's nothing to do with it. It's all because the repo market got stopped up, and when it got stopped up, then the effects happened, creating that recession. Now, when it comes to SAM recession indicator, last year did set off the trigger for a recession to occur, but there was a period of 3 months of unemployment above 0.5 point. Now, that's the key indicator to show over a 12-month average that they're saying. Over a 12-month average, there needs to be a 3-month period of unemployment. That's what said in the data. But there was a delay, and it didn't happen. And that was one of the reasons of interest rates not being cut. Now, it did twice last year to have one interest rate cut, 1 basis point. But that was done 2 separate times. Now, from the SAM recession indicator, you can find this from St. Louis Federal Reserve website, which is fred.stlouis.org/series/SAM realtime #0. I have to say hashtag because if I say pound, you're not going to, no, most people aren't going to know what that is. Now, federal funds effective rate is same thing. fred.stlouis.org/series/Fed funds. So instead of SAM real time, it's Fed funds. But from the federal funds effective rate, this is to show what the interest rate is. People don't talk about this one a lot. This goes hand in hand with the others that I'm talking about. Why I'm going to talk about as to the forecast is going to make sense on the basis of other data I'll just share in a moment. But last year, exactly 17 years later to the day, September 18th, 2007, the Federal Reserve cut rates. And doing so 17 years later, September 18th, 2024. Both of them cut half a point. Now, last year was also in November 7th, they did another half point cut. Now, when it came to 2008, because they did 2 rate cuts 2007, then they did 10 rate cuts in 2008. So why is it important to mention September 8th, 2024, 17 years later? Because there was the real estate crisis, REITs went down, a lot of people had 401ks, they pulled out, some people stayed in with the 401ks, they bounced back up. Then you had 2008, the financial crisis. It's important to say that September 18th last year, 17 years to the exact day, the exact interest rate cut shows there is the recession coming. I'm not going to say that's the only key indicator, but that is one of the strongest indicators to show that happening. Now, a couple more data points before I really show an economic forecast. We have tech-led growth, AI, automation, digital platforms, and data processing. There is a huge tech bubble, a massive tech bubble. So instead of real estate bubble, which was happening between the years 2002 to 2006, we're talking about a massive tech bubble between 2020 to this year. A lot of that has to do with AI and automation. Not the only things, but those are the things at the forefront. You also have consolidation and competition. So M&A activity and tech incumbents are gaining a lot of share. You also have regulatory complexity, which is both a stabilizing force and growth obstacle. You also have risk landscape, which is cybersecurity, economic volatility, and natural disasters are systemic concerns. And then the trajectory for what a lot of family offices are looking at. The industries are resilient but evolving toward high-tech, high-compliance, high-barrier ecosystems, favoring large players or niche specialists with capital, human capital strength, and agility. Now, if you don't know what human capital strength is, it just means your employees. How strong are your employees' loyalty and the productivity that they're providing? That's what that is. Now, to make a forecast, what we're looking at here. And again, because this is not financial advice, this is just educational content. Feel free, ask any questions along the way, any comments, feel free to heart this, share this with others. But on the basis of the Federal Reserve and straight the Fed fund effective rate, you have the next FOMC meeting. All you really need to know is that it's a Federal Reserve meeting. It's going to happen between the 16th to the 17th this month. And people are betting now, not last year, because people weren't really talking about that as much. But this year, many economists, investors, people in banking, people in the finance world, maybe people not even in the finance world that have some investments, they're betting on the Federal Reserve to lower interest rates in this meeting. It's not just that. They also had Trump talk about Powell needing to lower interest rates. You have other politicians saying the same stuff. I was like, because the more we drag out the interest rate cuts, the bigger the crisis is going to be. Doesn't mean a collapse. I don't promote that unless data actually shows that. What it does show is that it's going to be bigger than 2007 to 2008. That's what the data is correct about. Because the economists, not just what I'm saying, because you don't have to take my word for it. The economists, because other people have come to me, not as economists themselves, are already saying it's going to happen next year. And I don't just say economists are all saying that, but there's also people who have made predictive models way before this technology that we have in the public. They made those predictive models that are about 98 to 99% accurate. The one, if I'm not mistaken, is Samuel Benner. His is more on the economic model. And that was in the 19th century. And you have William Delbert Gone, who did predictive analysis on the stock market. And so his was the early 20th century. Samuel Benner was mid to late 19th century, if I'm not mistaken. So that's where that information is coming from at that point, besides economists, what they're already predicting. But we're also going to be seeing mortgage rates lower. Why? Because when the Federal Reserve lowers interest rates, then you're going to have banks and mortgage lenders lower their rates. You also are going to see carry trades are going to tighten margin calls even further. Now, many people are not familiar with what a carry trade is. And a lot of investors will be familiar with the yen carry trade. A carry trade just means that you borrow from a country. We'll just take the Japanese yen, for example. And it was actually one of the reasons for the 2007-2008 tank. Not the only reason, but it was one of the biggest reasons too. But a yen carry trade, let's say, because the yen has a lower interest rate, investors will borrow from the yen, and because they do have to pay a fee for exchange to the foreign currency, and they'll usually do it the U.S. dollar, Federal Reserve note that is, in fact, because there is a higher interest rate. Well, when you have the yen and the lending rates there in Japan increase, and then you also have the Federal Reserve decrease the interest rate, you have what's called a margin, and the margin shrinks. Well, because when it comes to a carry trade, you're able to pocket the difference. So because you're able to pocket the difference, you're investing into higher yielding assets. But because the higher yielding assets are already locked in, and you have interest rate starting to come up, which means that now the value of what you're borrowing against is becoming less, and you have the interest rate from Federal Reserve shrinking, the profit potential also starts to shrink. So what do the fund managers do? Margin calls. They need more capital. They're saying, hey, we need to make sure that you continue to make a profit. So that's what we're going to be doing. We need more capital, so that way we don't dilute your investment. Or they'll just go back to borrowing. That's what that forecast is also looking at. Carry trades will tighten margin calls even further. And you also have ExxonMobil. So there's a bunch of large conglomerates that are doing mergers and acquisitions over the last several years. But the one that I've seen consistently have more acquisitions than most is ExxonMobil. And so this also has been a key indicator that when you see large corporations start to do acquisitions and start to do multiple acquisitions is also another key indicator for a recession coming. And so because ExxonMobil has done multiple, more than most large corporations, is another huge indicator for a recession happening. Private equity. Private equity is also another thing. It's taking a lot of public companies private. Why? Because they know what's happening. They know that when the stock market hits the tank bottom, whatever you want to say it, whatever you want to call it, but when they know when that happens, so they don't dilute their profitability. They'll be able to take those companies that they're making public to go private, become public again. They'll definitely do that. Maybe not all of them, but they're doing it so that way they hedge against that profit dilution. Another aspect of what we're seeing is Trump's $175 billion Golden Dome. It wants to be finished at the end of his presidency. One thing I always point out is, okay, why do we need something that doesn't show any kind of effect? Why it's necessary? Because the whole point is to deter for air, land, water. I believe he's including space in there. Well, this was back in May. And it's like, okay, why are you doing that? It made no sense whatsoever. I have my own speculations. I have my own opinions. I'm not going to talk about that there. What I'm going to talk about is the fact that China recently is preparing for war. Now, are they going to war anytime soon? There's no indication of that. But it will most likely happen that we're going to see China going to war at the end of Trump's administration. So it's going to make sense why then Trump is implementing the $175 billion Golden Dome to be finished at the end of his presidency. And with China recently already saying it's either peace or war. We're on the right side of history. Like, okay. How many times have you said that? Now, I did actually, let me put that in here. That was one thing I did not add in here. And it just came to thought. And I'll mention, so on the basis of recommended solutions. Again, these are some that you can just take. You don't have to. It's up to you. Again, everybody, feel free to comment, heart this, share this with everybody. I'm doing this every single Monday in Pacific Standard Time in the afternoon. But your recommended solutions, short any tech stocks that you have. I wouldn't say just any and all. Be decisive, be discerning, have wisdom. Make sure you know what is the best approach in order to short your tech stocks, because you obviously buy them back later at a lower price. But the whole reason for you to do that is because there is a tech bubble. It's just like when it came to the real estate crisis. You had most people that pulled out and didn't get back in, or you had some people that had like a 401k, or they shorted their real estate, their REIT stocks, REITs, which are real estate investment trust, and they shorted the stocks out of those. They bought them back at a lower price, gained more share that way. Doing the same thing with tech stocks is going to help benefit you and profit more on that long term. Now, not saying when to do this, not saying how to do it. That is going to be between you and your stockbroker, or you and your AI model that you use for your stock portfolio. That is on the tech stock side of things. When it comes to Forex, I'm not going to go in depth with that as of right now. I'm just focusing as to key indicators for this. But you also want to be buying precious metals, precious gems and stones, land and resource rights. Okay, don't just get a title, all right? That doesn't do anything for you or anyone. It doesn't really guarantee that you own the property. When you get rights to the land and the resources, for example, going to the Bureau of Land Management, it's when you have rights over that land, not just because you have a title. And when you get the rights to resources, you're able to collect royalties on those, because you can sell out that land that has, let's say it's a quarry that I don't know, it's a quarry company that knows you have, let's say, quartz. It's the only thing I can think of. Say you have quartz, and you're not doing anything with it, but you can get royalties from it by selling the rights to that company to mine those quartz, the quartzite. Why not get royalties? Put it into a trust, tax-free. Royalty, tax-free income. That's one thing you could definitely do. I'm not saying it's the only thing. That's just an example of one area when it comes to land and resource rights. So there's water, gold, diamond, emerald. You could also, for example, farm. Say you have farmland, can give the rights and provide a royalty for that, where let's say a farmer utilizes your land for certain cultivation purposes, can get royalty income out of that as well. That's why it's important to have rights over land and resources and not just have title to it. You also want to invest into private recession-proof businesses. Some people might not be in the position for it. Some people might. It really just depends. This is just another recommended solution I'm providing. But investing into private recession-proof businesses, it doesn't mean you have to go acquire it. You can if you want it. That's definitely an option. I'm not saying not to do that. I'm just giving the recommended solution towards the investing side of it. So if you don't want to do the work, no problem. You can invest into it, but invest it into it on the private side, because if you do it on the public side, you're going to have more of a dilution to your profit in the coming few years than you would if you do it on the private side. So on the private side, you're going to have more of that preserved, hedging against any potential downside. Recession-proof businesses, you have plumbing companies, you have laundromats. Let's see. You have supply routes, like for example, while you don't have to buy FedEx routes and UPS routes, well, not UPS, UPS, excuse me. I almost got those two mixed up. But UPS, you get those supply routes where you can invest into somebody that already has those, and you gain your return through there. There's other types of recession-proof businesses out there. I'm just giving you a few examples where you don't have to acquire them. If you want to acquire them, that's great. Put them into your portfolio. If you don't want to do any of the work, just be an investor. You don't have to have a large amount. You can just have a certain amount that someone is looking for, put it there. It could be something as small as 1,000. It could be as large as 1,000,000. It doesn't matter. It's just something that will help as a recommended solution. You also want to secure your network firmly and qualify hard those that are entering. You don't want to just let anyone in, especially when we're coming into more difficult seasons. You absolutely, without a doubt, want to qualify the people that come in. Because the wrong people, I'm sure some of you already are experienced in the area of wrong people in your life. Qualifying helps weed out those that aren't beneficial to what you're doing. So that way you don't have to reveal everything that you're doing. Because the only people that you really want to reveal to that what you're fully doing are those involved into your projects, your businesses, your resources. And not just in the time where a lot of people are like, oh yeah, I want to network, I want to network, I want to network. That's great, you want to network. And you can definitely do that. But it's like that same old saying, hire slow, fire fast. Because when you hire slow, you qualify the individuals. You make sure that they are a good fit for what you're doing as much as you're a good fit for them. That is another good recommendation and what I would suggest for a solution these upcoming times. Another one, which is what I said that I just remembered, buy guns and ammo. Or if you have a 3D printer, you could definitely make your own guns that way, because a lot of people are actually doing that. Where they make their own guns from a 3D printer, or maybe you know somebody. Because one of the things that you can also do, where you don't just have to go to a gun store, you can do private sales. You can go to, and it's not on the basis of like you're trafficking weapons, because that's something that's a little different. You don't want to really go down that path. That's a CIA route and smuggling route. What I'm saying is that you can do private sales, where you can always transfer the information of the weapon from you to another individual that you trust. And you can always go that route. Ammunition, you can always buy at any store. Just have to be 18 years older. You don't even have to have a driver's license. You can just use a passport. Definitely guns and ammo. Absolutely recommend Solution, just because of the times that we live in. Also, I don't have this in here, but invest in yourself, which also invests into the way you protect yourself, not just physically, but emotionally, mentally, spiritually, financially. Investing into the way you're moving about life. That's another area. And in that, what I say, because I come from following Yeshua: pray, meditate, fast, worship, read scripture, engage the spirit realm, grow your identity in Yeshua. These are a foundation. Doing this helps grow you. If you follow Yeshua, helps grow you in that direction. If you don't follow Yeshua, many people who are New Age or call themselves spiritual, you already know. Got to pray, meditate, fast, engage in the spirit realm. But a lot of people just don't realize in the New Age community, one aspect of design in human is to worship. But a lot of people convolute worship. Worship is on the basis of what you put full attention towards. The full attention that you put into and you focus everything on, that is a form of worship. So, from that perspective of following Yeshua, whatever you focus on needs to be your identity in Him. That's going to be worship. It doesn't have to mean just singing songs, playing some instrumentals. That is a way, but that's not the only form of worship. Worship is what you put your full attention and focus on. So when you invite Yeshua, you invite the Father, you invite Ruach HaKodesh, which is Hebrew for Holy Spirit, into what you're doing, you're focusing on them in what is being done. And that is a form of worship, because you're spending time with them as much as what you're doing at the same time. So, those are recommended solutions for what this economic forecast that I've given. I know some people have come later. That's okay, because I'm always going to be doing these live calls every single Monday in the afternoon. Now, over the course of this month, I'm not going to have a specific time as of yet. I'm going to just test things out, because I'm coming back. I was doing lives all the time, and I would always say I'm not going to get on the algorithm. And while I did those in the past, just taking a massive break, doing some other stuff, putting stuff together, that now what I am doing is coming back every single Monday to bring economic consulting to help you and your family achieve the desired vision you're wanting to achieve. It's not about me. The only way it is about me is just providing the content. But for the people, it's about how they want to grow. So for anybody that has questions, comments, feel free to jump in. Or if you have, I think it's over 1,000 followers, you can always jump on in the live, if I'm not mistaken. So just to recap what we talked about, though. I made a disclaimer that I do not do any legal, tax, accounting, or finance This is all purely educational in the realm of economics. Talked about how I have 6 years of hands-on training and experience in the economic consulting. There's more that I have that has experience, but what's applicable to what we're talking about and giving that experience. This is so that way the benefit for you and your family is to get through strategically any economics up and down. So you have the knowledge and the tools necessary to plan and prosper and pass that on long term to your children, children passing on to their children, and so forth. And like I said, it really just depends on what you are implementing. It can take anywhere from an hour up to 12 months, depending on what solutions you're implementing that results in that end. For example, let's say, I don't know, you buy a gun. End result, what is that? You bought the gun, you're using it. That's a very quick end result. But if, let's say we're looking at, you acquire a business, you're not going to see actual implemented results until about 12 months. You'll start to see it there, but you won't see profitability until after a 2-year period. Now you can see, and that's for most businesses, on the basis of, let's say it's, I don't know, we'll take social media, okay? Let's say you are doing live calls and you get, I don't know, 10,000 one month, you get 1,000 second month, 50,000 third month. I know it's random, but even though those are your first 3 months, those first 3 months can start to determine what your average gross looks like. Then doing that every other 3 months, because you're looking at every quarter. When you're looking at every quarter, then you can start to see that, because each quarter you'll be like, okay, so this will happen quarter 1, this will happen quarter 2, this will happen quarter 3, quarter 4. Here's what happened over the year. Okay, I project it's going to be like this, from the basis of what happened in quarter 1, how then I have quarter 2, quarter 3, quarter 4. Not on the basis of just budgeting, because budgeting is great, but you stay as a small business owner that way. You project, saying, hey, this is what the number I'm going to achieve because I already did this. Here's how I'm going to reinvest and get it to this point here. Then we went over the data, which again came from Center for Financial Stability, World Gold Council, American Bankers Association, SAM Recession Indicator, Federal Funds Effective Rate. Like again, I said, those are just the top 5 that I used out of multiple websites that I actually use for information and research. And I don't just use the data. I take the data and talk to my network as well as other people to see what it is that people are feeling, as much as does it have a simultaneous congruency with the data. If it doesn't, I just throw away that data because it doesn't apply to what people are feeling. Then, of course, we went through trajectory. We then went over the forecast, and we talked about recommended solutions. Every Monday, I will be providing this information. I do have 2 other things that I am doing. I'm going to put my link tree back up in my bio. I'm going to be redoing that today because I have not just this that I'm doing on Mondays now. I have a podcast that I've actually been doing since 2020, and that actually paused for about a year or so, but it did well. It was the most shared worldwide, the top 30% most shared worldwide on Spotify, and that was back in 2022. That goes in depth into research into different topics on a factual basis of what people will term conspiracy theory. And I take what is factual as what people have been experiencing. Right now what I'm doing there is on the basis of a list of occult terms. And is it really occult, or is it a convoluted term that applies to how we can actually use it? That's the season that we're in. The last one I have is what's called a Kingdom Economics call. I do that every Saturday. I also upload, not every time on YouTube, but I do upload on YouTube, a video of what we are doing there. And you can always come on for the first free call. After the first free call, it is $9.99 a month. That's $9.99 a month. There are no refunds, but you can cancel anytime. That is something I do every single Saturday, and that is going to be, if I'm not mistaken, 1 p.m. Pacific Standard Time. And so I do give out the link on all my social media. When it comes to my podcast, when I do upload it and publish it, I do also provide the free link, so that way you get your first free call to the group Kingdom Economics call that I do every Saturday. And of course, this one, absolutely free, every single Monday, giving you the economic forecast. I'll probably as well bring in asset protection, because I do have experience in there. I'll go in depth into that, my experience, and best ways to apply, things like that, how you're able to successfully execute in protecting what you protect. But if it's to the point where that someone wants to specifically have their portfolio tailored, or they want to have what they have built protected, or they want to have a business grown, that's something where I will tailor a solution and bring an estimate for their investment and what they're looking to achieve. But otherwise, this call is absolutely free all the time. I always take donations, always take gifts. I don't ask for it. It's just something that if you do it, great. If not, doesn't bother me. But these are the things that I do that I'm showing, that I'm sharing. I'm going to put it back in my link tree, and I'm going to put it back in my bio for you all. But this one will be strictly for economic forecasting. Again, I might put in asset protection in there in a little bit. But I appreciate you all coming in, learning, and what you were able to apply. Hopefully that you are able to apply these recommended solutions. And if it's not some recommended solutions that really what you're looking at, no worries. I'm sure it's helped open up your mind to other recommended solutions that will hedge against future downturns in the economy. You all have been great. Appreciate you all. And until next time, I will catch you all. I'll be doing this again around the afternoon. I don't have a specific time, but it'll be in the afternoon, Pacific Standard Time, every single Monday. Until then, I'll catch you all out. Peace.